in the way we would like to see our president act. But first, Occupy Wall Street. The protests sweeping across the country and the globe. Those marching against economic inequities in America were given more rhetorical ammunition when one of the world's richest men, Warren Buffett, revealed how much money he made last year. In response to Warren Buffett's now famous August New York Times editorial saying he pays less in taxes than his employees, there's a Kansas Republican congressman who issued a challenge to Buffett.
Well, I'm saying if we're going to shape an entire nation's tax policy based on one man's claim, show us the proof. You know, if Mr. Buffett came before my budget committee, we'd expect him to show us the information under oath, and that's a reasonable expectation if we're going to change our entire nation's tax policy based on his claim. Yeah, and I'll tell you what, I'll trade my tax returns for his tax returns, and we'll compare them, and then we'll make a discussion about tax policy after we see him.
Well, boy, I'll tell you what, he really backed him into a corner. He backed Warren Buffett in a corner because there's no way Warren Buffett is going to come forward and say, this is how much money he made last year.
Well,
boy, Congressman you got him nailed. You got him nailed. He's not going to follow you into that briar patch, my man. Right?
Warren Buffett has now responded to the congressman in a letter. Buffett wrote this.
Just now?
To be specific, my adjusted gross income, line 37, was $62,885,038. My taxable income, line 43, was $39,814,784.
Hard to read all those numbers, isn't it?
And my federal income tax, which is line 60, was $6,923,494. In addition, my payroll taxes were $15,300.
It's kind of like watching a tennis match.
Yeah.
So Buffett hit the ball back over. So so Buffett went on to point out that if you look at the statistics that are published by the IRS, it shows that the 400 highest income Americans whose incomes average $227 million each paid 21.4% of federal taxes, 14% below the actual top rate. What was Warren Buffett paying? About 17%. So Warren Buffett pays a 17% tax
Good for him,
rate.
Isn't it?
So we've known this for a while. We actually even knew his taxes. He had never disclosed his income, but from his taxes you could have actually figured out his income. But be that as it may, I know that you've talked a lot about accountants and lawyers and all this stuff.
Right.
This is not complicated. A $100 an hour accountant from Pensacola could have done these tax returns.
Well, first of all, what is that?
I'm sorry, was that a jab? He's going to get hurt.
Are you going after my hometown?
No, I'm complimenting them.
Where are you from, Yankee boy? What's your hometown?
That's a need-to-know basis.
Well, okay. Wow. Willie, that sounded derogatory.
I think it might have been.
It did.
You could take the accountant from Pennsylvania and Herman Cain's accountant
let's take
from Cleveland.
Why don't you the guy from Cleveland that takes pride in the fact that he's not an economist?
We get to Steve Rattner's chart.
All this is Warren Buffett takes advantage of a 15% capital gains and dividend rate. That's why Warren Buffett pays 17% in taxes. Not complicated. Very simple, because we have a 15% rate compared to 35% rate for an ordinary income for dividends and capital gains.
So we're going to get to your chart in a second. Answer this question, because it's been debated for years, going all the way back to JFK, who believed that lower capital gains rates would spur on the economy. What has been the impact of the drop to 15%? Tell our viewers, when did we drop it to 15%, and what has been the impact over a decade?
It was dropped from 20 to 15. Actually, it was dropped from 28 to 20 by Bill Clinton, from 20 to 15 by President Bush 43 in 01 and 03.
And you can see what's happened to the economy. Okay, so I guess game, set, and match for the conservative guys who say cut it, because look how great we're doing.
That was sarcasm.
Yeah, way to go. Yeah. Did your accountant from Schenectady tell you that? Okay, so show us your charts.
All right, so I think we want to talk about Occupy Wall Street, and I think the point is that underneath all this rhetoric and emotion and everything, there is a lot of substance behind what they're saying. So the first thing to look at is what's happened to incomes since this recession. They're down 2.3% in the first year of recession, and if you look at the last two recessions before that, in the recession after the dot-com bubble, they were down 1.2%. In the recession from Bush 41's recession in the early 90s, they were down 0.8%. The point is incomes are down more after this recession than after the last two. And they're actually down 6.3% over the last 2 years.
Let's talk about the lost decade. I think that's a chart that people are going to really be fascinated by.
So the lost decade, essentially what's happened to real family incomes over the last 10 years is they have essentially ended the decade lower than they began it. down 7%.
Now,
this is the first decade in American history where this has happened.
This is the Census Bureau, Steve, and the important point here is, and I am a guy, I'll say it right here, I'm a guy that's always argued for lower capital gains rates for the same reason Kennedy liked it, for the same reason a lot of people have liked it, because they thought that would spur investment, and you don't want to punish people for making smart investments. That said, the past decade, since it's gone down to 15%, the results have been bad.
Yes, there's no evidence that it's helped the economy, but look what's happened to incomes. So they're straight down, and in fact, this is when we got to our peak in 2007, before this recession. It was the first time family income had not gotten back to the previous peak before the next recession started. So you can understand why people on Wall Street are unhappy. And if you look at the last chart.
And this chart basically takes us back. It's fascinating, the parallels to 1929, the accumulation of wealth among the richest Americans, now on par, as divergent as it has been since 1929.
So let's look at that. And we do this by income. And first, let's take a look at the top 10%. These are people who make on average about $125,000 a year. And you can see they were bumping along in the post-war period about 33, 34, 35%. And then it just started moving up. And it's now 50% of national income, higher than it was actually right before the crash. So
people who make $125,000 or more take up 50% of...
10% of people, 50% of income.
50% of income.
Now,
the next chart, more fascinating.
Now, let's look at the top 0.01%. This is about 15,000 Americans who make on average $27 million a year. And you can see they were also bumping along at around 1% if you look at the right-hand scale for this one, all through this post-war period. And then they took off. And then they hit over 6%, well above where they were in 1928. And the only reason it came down a little bit in 2008 was because of the stock market crash. So I would bet in 2009 it will go up again.
It's going to be way up.
So you have 15,000 Americans getting 6% of all the money made in this country.
So let's boil that down, Mike. 0.001%?
0.01%.
0.01% of the population has 6% of the wealth. People making $27 million or more.
Yeah, and that's why there's a lot of legitimate aspects to people occupying literally Wall Street, occupying Wall Street, protests around this country and now smaller cities as well as larger cities. There's a real legitimate concern and complaints about what's happened to incomes.
I tell my friends on Wall Street,
they've been stagnant.
I tell my friends on Wall Street, you may not like it, you may not agree with it, but you got to get it.
Yeah.
These people are angry and they have a reason to be angry, and if people on Wall Street don't understand that and respond to it, then we're going to have a lot more social problems in this country.